Can you address or answer or debunk the idea that Bitcoin is a bubble?
Yeah, so I mean, I think to start with, I think it's it's really good to have FUD, right? So for any asset, you should have fear, uncertainty, and doubt. You should be highly critical of any asset because a lot of assets are there are a lot of bubbles out there. There are things to be worried about. You do have to manage position sizes or leverage, whatever the case may be. And so I think the first thing is basically accepting that you do want to be critical to any asset class. And I've been that with Bitcoin, for example. I looked at it in 2017 when it was having that big run up, and for a variety of reasons, I included I was not going to invest in it. And then it had that blow off top. It consolidated, and so basically to take a step back, Bitcoin goes through these kind of 4-year supply cycles where every 4 years the number of new Bitcoins gets cut in half. And so normally, Bitcoins are generated every 10 minutes when a new block is introduced to the blockchain, and the number of Bitcoins that are added to the system with each block gets cut in half every 4 years. And so the total supply keeps going up, until it eventually reaches 21 million, but the rate of new supply keeps going down. And so what we generally see is that we see a big run up in price, and then it has a blow off top, and then it crashes, and you get this kind of consolidation. And it sort of finds an equilibrium between buyers and sellers. But right when it does that, after a couple years, you get another supply shock. And so, the supply is cut in half, but demand is still there. And then, over time, that starts to manifest in higher prices. And then, of course, momentum traders jump on board. People get over leveraged. People get euphoric. It has a blow off top. And then, finally, just buyers get exhausted, and it rapidly unfolds. Then you get a big crash, and you get another consolidation. It finds another balance, and then you get another supply halving. And so that's what we've gone through about 3 cycles of that. And so far it's played out roughly the same way every time. And there are a variety of different fundamental indicators you can use. You can look at market capitalization to realized capitalization. You can look at relative strength index. You can look at various indicators to basically see how overbought you are. And you can also you can look at, for example, Google searches for it. And so basically, I would say that at this stage where we are now, we're certainly in a bull run. I think we had a local bubble, like you can have these kind of near-term overbought conditions, and then you relieve some pressure and build up again. I think current at the moment does not look like we're at any sort of end cycle phase. It just looks like we're kind of in a mid-cycle phase. But I think you can manage that by just having a long enough timeline and by looking at all these different indicators that might show you roughly where you are. And that can help you just determine for yourself how much risk you want to take, how much you want to allocate to this asset class, so that you're not concerned with price fluctuations, right? If you're up all night, if you're expecting to get super rich in 3 months, you're worried about kind of a 20% drawdown, then basically what that's telling you is that your position size is too big for your, whatever the case may be, for your financial situation, for your level of conviction, and that you basically just need to make sure that your position size is appropriate, for who you are.
Absolutely, Jeff. I'll give you a chance to jump in there and add on if you have anything. Otherwise, we'll move on to the next piece of FUD.
Yeah, and long term, you don't get a new monetary standard very often in a lifetime. Something like this invention, I put a quote up that I think it's possibly humanity's greatest invention. That seems so ludicrous. I know when I say that, it seems that ludicrous because people are measuring today what it does today, and it doesn't have a lot of use. But if you play that forward on what this does, and everything else is fixed as a result, it quite possibly could be. I'm sure when Gutenberg and the Gutenberg press and democratizing information and allowing information to travel, I'm sure when that was invented, people didn't say it was the greatest invention in the world. So this is similarly, we're very early in a cycle that has massive implications for how our world is structured, and positive massive implications for how our world is structured. So I do understand that there will naturally be a whole bunch of FUD here. I also understand that that in this community, it can be overwhelming for somebody new into the community who is scared. and what I love about Lyn, what I love about Preston, what I love about a whole bunch of the community here is we have to understand it didn't look like this to us when we started either. We had to go through this path to be able to understand it. And so I prefer it, and Swan does a good job here when understand what people would think about this asset class when they come in, even the haters. It's okay.
Absolutely. I think that's a really important point to make before we go through the rest of these claims about Bitcoin that you often hear when you're coming into the space. So we have 8 minutes left, 6 claims to discuss. So the crunch is on about 1 minute and 15 seconds for each one. So Jeff, challenge is on. A minute on Bitcoin's intrinsic value is 0.
A currency's intrinsic value is 0 if that's the case. It's just a piece of paper. It's an abstraction of our time. It's just an abstraction of our time that says what we decide it is. Currency is a measure of I get paid X that I can spend later on. That is all it is. It's an abstraction of your time. When you manipulate currency, you manipulate time as a byproduct, and you can expect a whole bunch of downstream consequences of that. So what Bitcoin does is it changes that you can trust that if I do this for on Bitcoin, I can spend that way later on, and nobody can manipulate it.
Excellent. Lyn, let's go to you. Bitcoin isn't scalable.
Yeah, so that's been a kind of a common criticism of some of these other tokens that have tried to basically make sacrifices. And so if you look at how payment system works, you're optimizing for a couple different variables and making sacrifices for other variables. And so, for example, Visa, they sacrifice decentralization, but they maximize the amount of throughput that can happen in the system. And they also, they have pretty high security. On the other hand, you could sacrifice some of those other attributes to have more decentralization. And so with Bitcoin, they sacrifice throughput of the system on the base layer. And so there's only a handful of transactions that can happen per second on average, but there's no cap on the amount of value that can be transmitted per second. And so basically the way that Bitcoin's designed is that, it's really good for large payments and settlements. But then over time, you'll need some sort of scalability solutions built on top of that. And that's where we have things like the Lightning Network and some other things like Liquid that basically, add second layers onto that base network. And so they still allow, for different degrees of trust. You can have totally trustless second layer. You can have partial trust second layer. All sorts of different kind of ways to do it, depending on what the particular needs of the user are. But basically, there are ways to, batch transactions together. And so actually, if you look at the banking system, that's how something like Visa works as well. When they do those rapid transactions per second, they're not settling those transactions on the spot. They're basically, updating their ledger, and then those banks are settling in larger batches behind the scenes. And that's essentially how Bitcoin would work with Lightning, is that Bitcoin would be the settlement layer and Lightning would be the quicker layer. And so I think that over time, Bitcoin in some ways is looking more like the banking system in that specific regard. Other protocols have tried to increase throughput on the base layer, but that comes with a lot of sacrifices, mainly that you make the nodes very hard for regular users to run, and therefore you have less node decentralization. You have kind of, it takes a larger entity to be able to run a node properly.
Thank you. Fantastic. Jeff, 1 minute on Bitcoin wastes energy.
So Bitcoin does use a lot of energy. It's part of the design in driving the scarcity. Here's a huge part that people don't see. The existing system requires an embedded growth mindset. Embedded growth is based in this existing system. So let's imagine on one axis, today solar is coming on as a lower cost form of energy, and it's additive to the entire energy grid. And we can expect that to continue. So the only way to overcome that lower cost and cleaner form of energy in the existing system is manipulate that out. So increase inflation and essentially destroy all the value that innovation brought to society by making prices go up through time. So an order of magnitude bigger problem for our environment is the existing systems growth minds, growth for the sake of all growth. We have to grow forever, otherwise the debt collapses, and we'll manipulate money to be able to grow. So in context, that's not even looked at when people talk about this. Now, on the other side, Bitcoin, for the network to survive, and or not network to survive, miners are always looking for the cheapest form of energy, and so they actually help drive lower cost and green forms of energy in scaling Bitcoin, because they're always on the lookout of that. But I'd say the thing that's missed across most of the community and in the green, how is a government going to solve the green energy, everything else, from within the existing system when they have to eradicate those gains by printing more money to be able to make innovation not be deflationary? It's impossible. The existing system can't solve it.
Thank you, Jeff. Lyn, a minute on Bitcoin is too volatile.
Yeah, so that's a common criticism about Bitcoin as a store of value, that it's just way too volatile. Like we've seen in recent days. I mean, it can go down dramatically in a number of hours, let alone what it can do over a course of days or weeks. Now, I think it's helpful to think of Bitcoin as an emergent store of value. And so basically what we're watching over the past 12 years is that we're watching the Bitcoin network grow and absorb more capital. Now, there's different ways to measure it. So, for example, if you measure the market value compared to the realized value, which is basically it compares the market capitalization compared to what is essentially the cost basis. So the weighted average cost basis that users bought into the network. By that metric, you've had decreased volatility with each 4-year cycle. And so over time, as it grows into a larger and more dispersed asset class, you should, in theory, see lower and lower drawdowns and fluctuations based on that. Now, until Bitcoin reaches a large market capitalization, you should still expect to see a significant degree of volatility. And so, basically, instead of looking at it as an already finished store of value, you're looking at something becoming a store of value over time. And so far, it's been a grower of value because it's early on the S curve. It's having that big growth profile, and so you basically you're getting a lot more volatility in exchange for more growth. Now, as that completes the mature phase of the cycle, you should see much lower growth, but then much less volatility if the system kind of works out as many of the Bitcoin bulls expected it will.
Lyn, I know you have to go here in just 1 minute, so I will give you this last one, and then we'll have one more for Jeff, and we'll be out for this episode. So, Lyn, Bitcoin is a Ponzi scheme.
Yeah, so addressing that one, there's a couple ways to look at it. And so, a Ponzi scheme, as people know it, is basically that people put money into an investment. That investor ends up lying to them rather than investing their money. They're just paying them back from previous investor money until they run out of enough new buyers, and someone tries to get their payment and they can't, and then it's revealed that the whole thing is a fraud. Now, some people have said that Bitcoin's a Ponzi scheme. Now, in some ways, it's the opposite of a Ponzi scheme, because Bitcoin is actually, it's open source. It's totally, verifiable, auditable. Anyone who has their keys can move their Bitcoin. And so in that sense, it doesn't really meet any of the definitions of a Ponzi scheme. Now, some people then apply it to a broader level, and they say, okay, a Bitcoin is only worth what someone's willing to pay it for you, and that therefore eventually you'll kind of run out of buyers. Now, again, I would go back to that kind of S curve of adoption. So right now you're in this rapid period of growth, but as you get into a mature phase, then you're in more of a steady state. And we can kind of look at gold today has been in a steady state for a while, where it keeps up with the growth of money supply in terms of price, but it doesn't really kind of dramatically alter your purchasing power. And again, just like Bitcoin, gold is only worth what someone else will pay you for it. It has certain properties that make it valuable for a variety of reasons. And same thing with Bitcoin. So Bitcoin has utility as an international payment system and settlement system, and of course, it also has utility as a store of value. But its focus is very monetary in nature, and so there are frictional costs of the system, like transaction costs and kind of block rewards and basically security fees for processing transactions. But that applies to any non-cash flow store of value. And so, for example, if you were to store your your value in wine or classic cars or beachfront property or fine art, what you're basically doing is you're buying an object that does not produce cash flows, with the understanding that it's scarce and likely to kind of hold its purchasing power compared to other things you might consume. And there are some frictional costs on that. Like, you have to get it appraised, you have to transport it, you have to maintain it, whatever the case may be. Many of those are less liquid. And so when you look at something like Bitcoin or gold, you're looking at a more liquid, fungible, situation. And there are frictional costs on the system, just like any other kind of healthy system of commerce. And so in that sense, it can be thought of as pretty much like any other non-cash flow store of value. And the main difference is that they all of those have some degree of utility. So they have wine, you can drink it, beachfront property, you can live in it, classic cars, you can drive in it. Bitcoin's utility is basically that you can make permissionless payments, and that you can self-custody it. And so besides that utility, then there's a monetary premium assigned to it as people want to hold it as a store of value, in case they were to use that utility, but moreover, because they know that other people recognize utility and might want to buy it from them at a substantial price at a later date. And so I would kind of compare it to other non-cash flow stores of value in that sense. Of course, from the bullish perspective, you can say combined with the network effect, it's in many ways better than those other stores of value. But in terms of kind of the mechanics of how the system works, it's not too different than them.
Fantastic. And if you want to hear more from Lyn on that topic, that was a fantastic summary, but she dropped a piece yesterday on the Swan blog. The link is in the description of the video below. All right, Jeff, you get the final swipe at governments will ban Bitcoin. And Lyn, if you need to jump, feel free. All right, so yes, Jeff, governments will ban Bitcoin.
First on back on Lyn's, the real Ponzi is the existing monetary policy. It requires ever exponentially more printing of money. It is, by definition, a Ponzi. It requires more and more and more, and the people closest to the top are the beneficiaries. So, will governments ban Bitcoin? The simple answer is yes. Some governments will ban Bitcoin, but the game theory of Bitcoin means others will incentivize it. If you just look at what's happening right now and the likelihood of the U.S. embracing it, and what that does to the geopolitical game in China, it is the way that U.S. It seems to me U.S. would be most forward in driving Bitcoin, because if you go back to the founding of the U.S., it is based on hard money. It is based on it is based on freedom of the individual. So it is so polar opposite of dictatorial states. It's highly likely that the U.S. kind of leads into this. Will there be taxation on the on ramps? Will there be a whole bunch of things to figure out? Yes. But will Bitcoin be banned by all governments? No chance. Where we are right now, zero chance. It will keep on moving. It would take, to think about trying to ban it internationally right now. It's just such a zero probability right now. Will certain governments ban it? Potentially. I saw a tweet. I can't remember who put it. The first government who goes in heavy right now won't have to charge taxes forever. Because of it. And when you think about the incentive structure for what are governments anyways, right? It's something we all agree to, a structure that we all agree to work underneath. So it should be, forget governments, it should be our decision. And as that happens more and more throughout society, there's nothing that you can do to stop a decentralized network where we are now with the exponential pace of how fast this is moving, stopping it.
Absolutely agree. Thank you so much for answering that common question that we get. So there you have it. Lyn Alden and Jeff Booth answering 7 common misconceptions about Bitcoin. So for all of you new coiners out there, new holders, I hope that this helps, and we'll clip it out and put it up on the channel as a separate video, and make sure that we share it on Twitter and elsewhere, wherever we have these common questions asked. Jeff, thank you so much for your time, man. I'm going to go ahead and let you drop, and I'll wrap this thing up. Appreciate your time.
Thanks a bunch.
All right.
See ya.
Bye, Jeff. Okay. Thanks for being here, everyone. It was a fantastic show. We have links below to the works we discussed today by Lyn and Jeff in the YouTube video description. There will also be in the podcast description when this audio goes up. Also, like I said, we had an incredible time on Clubhouse last night. It is an iOS only app right now. It is invite only still at this point. It's rolling out. So if you are on iOS, if you are just ask somebody for an invite. I have a few myself. DM on Twitter and ask if you want to get in. It will open up to Android and the wider world at some point, hopefully in the near future. It is a fantastic platform. It's an audio social network, and it's been a lot of fun to discuss Bitcoin on that network. Essentially, we ran a radio show last night with Brecky and Brandon and myself, and we answered questions from beginners for 3.5 hours. And like I said, it was incredibly inspiring and expiring, I guess, too, because it was 3.5 hours. It was both. It was really inspiring to answer those questions and to hear the excitement and the just curiosity for Bitcoin. And this cycle, just like the previous cycles before it, are going to bring in more and more people. You, as a Bitcoiner, the person who is known as someone who holds or knows something about Bitcoin in your circle of friends and family, are going to be asked about Bitcoin this year if you have not been already many times. So you should grab a referral link, even if you don't stack at Swan. You should grab a referral link at swanbitcoin.com/enlist, ENLIST, and you can join our referral program. It's called the Swan Force, and we have a couple thousand members of the Swan Force now out there spreading their referral link and talking about Bitcoin. A great way that you can do that is to share a book. So when you sign into your Swan Force account, a dashboard, you'll get a link that's unique for you that will allow you to give a free book away. And anybody who downloads that book, Inventing Bitcoin, by the way, by Swan co-founder Jan Pritzker, anyone who downloads Inventing Bitcoin from your Swan Force landing page you will get 25% of their fees for 3 years. So you can really stack some meaningful sats. And you can also just grab the book straight yourself at swanbitcoin.com/free book. Share it freely with friends and family. Inventing Bitcoin is a great introduction to the Bitcoin system and why Bitcoin is important for the world. So grab that book by Jan, share it far and wide. We gave it away quite a bit last night. Also, subscribe to the channel here at Swan Signal YouTube channel. We put out content on a regular basis. We do 2 live shows per week. This show on Tuesdays, and then Swan Lounge, which is usually on Fridays. And there are 2 different shows. This one, pairs up guests, and we have usually kind of a more serious conversation. And then on the Swan Lounge, we kind of have more laid back conversation, talk about the week's events, and usually have a few more people on. It's a good time. Both are great formats. We also have a lot of educational content on the channel now and going up all the time. So subscribe here, share this channel with your friends and family. The podcast for this, if you're into audio podcasts, you can subscribe at swansignalpodcast.com. And that is it for this week. Thanks again so much for joining us. We'll see you next week on Swan Signal Live with Andy Edstrom and Preston Pish. That'll be a primetime episode at 9 p.m. Eastern. Should be a fantastic one. Those guys have been paired up on the show at least 2 times before, maybe 3 times before already. And it's always fire episodes. These guys are super smart and bring hot takes to the table. So be here next week for the primetime edition of Swan Signal Live with Andy and Preston. Until then, take care.